So I think when the economy collapses next, I think there's a lot of shit.
Hearing talk of a market crash similar to 2008.
Likely be a recession by 2020.
You know, he called this a big, fat, ugly bubble when he was running.
But he's the one now.
Right.
8 ways to prepare for the next market crash.
Are not used to major corrections. And so now we're starting to get them.
How much worse could it get, and how do you know when it's safe to buy stocks again?
The crash is coming, and I'm going to show you how to survive it. So let's jump right into this. Welcome back to my passive income investors. Today I want to talk about the thing that drives me nuts the most, and that is everyone that talks about the crash. Because not only do I don't think it's actually coming, I just said that is clickbaitery like these guys did. All of these people at the beginning of this video I really admire, but I think they really talk about market crashes and things like that just for clickbait. They don't really teach you a whole lot. They kind of just instill fear in you. And I think I'm going to dip my toe in the clickbait water, guys, and talk about my own ways you're going to be able to survive the market crash. Hope you find this information useful because it is the stuff that takes a lot of relief off of my shoulders, guys. Takes the world off my shoulders to know that I understand a little bit more about this. When I got into the markets, I was a lot more fearful. Now the market crashes don't even really faze me. I don't think about them too much. But let me talk about the two different kind of market crashes that exist, guys. There are two different kinds. One of them is what is normally known as a black swan event, essentially a 9/11, a World War II. Something horrible happens to the point where the entire economy breaks down, and you're really not going to be worried about the money in your pocket anyways or your investments. You're going to be more worried about getting food, surviving, and those basic fundamentals of life all of a sudden become very important. Whereas the second kind of market crash is more like your housing crisis, the tech bubble, things like that. And these market crashes are so much more bearable and survivable. And we actually just went through a correction. If you did not know, guys, S&P 500, TSX, all have been tanking all of pretty much 2018. We just saw it go closer to the downside. And a lot of people would have told you to sell out. A lot of people did sell out at the very bottom. And those people, in my opinion, are absolutely nuts. I held on to my investments. I saw my portfolio drop 20%. You know what I did? I took all the gold that I had, pretty much almost all the gold that I had. I liquidated it and I bought a ton of stocks with it. And now my portfolio has reached all-time highs as of yesterday, guys. So, numero uno, guys, for surviving the market crash is your leverage. Now, the reason my portfolio has been doing so well is because I'm not over leveraged in one or other sector in the market, guys. But what are you leveraged in the most? Warren Buffett says leverage can be your worst enemy. And the reason for that is if you are fully leveraged in debt, maybe you're a student in school and you've done nothing but take out a ton of loans and credit card debt, that is risky, guys, because if something bad happens, you are stuck with loans that are continually building in perpetuity interest on it, guys, that you are going to have to be able to pay back. Or for instance, maybe you are an investor, you don't have debt, and you are over leveraged in 2-3 stocks. Those are your entire portfolio is 3 stocks or something. If the market crashes and those companies aren't very sustainable, oh my goodness, well, your leverage is going to beat you into the ground, guys. It's kind of like having your eggs all in one basket. Leverage is the killer of the crash, guys. Don't be over leveraged in a crash. Have a diversified portfolio of what's going to bring you into the step numero dos, number 2, guys, which is cash flow. Are you leveraged in a good way in life to produce cash flowing investments that are going to survive a crash, i.e. not even just investments, but where do you work, guys? Is your employer reliable? Is the company that you're working for have a sustainable future if something got bad? Can they pay their debts? Are they going to be able to wind a storm so you can sustain your job? I make money off right now 3 different income sources, and I'm trying to get it up to another one using this YouTube channel over the next couple of years. But essentially, I make money as a full-time performer. I work with my business partner at a production company part-time, and then on top of that, I manage my stock portfolio, which also makes me a very healthy income every year. And my stock portfolio consists of over 8 dozen companies in 4 or 5 different sectors, guys. So I'm really not too worried about it because if the market crashes and say you own REITs, well, I'm sure if the REITs you own are where people need to live, even though the underlying value, the intrinsic value of a building where people live is, well, it's a tough foundation to rip out from under that, guys. Just that underlying value of everyone needs a place to live. Doesn't matter how bad the markets get, you still need a house, you still need to pay your rent. So the chances of me getting cash flow from those rental units, even though the properties are worth half as much, I think would be fine. You have to understand there's an underlying value to the market, guys. And when you know what that is, especially with utilities, people always need the lights to be on. If the banks go bust, the money in your pockets just is worthless, and you're not going to be worrying about stocks anyways. And plus, the bank is backed by the government, so there'd have to be some really bad things going on for you to worry about any underlying value in companies going completely to zero. Again, look at big investors, Warren Buffett, Charlie Munger, just all the big investors, guys. Mark Cuban, Kevin O'Leary, they're all really diversified in different ways, but the positions they have are rather large. They're comfortable investing big chunks of money in different places. So if one of those went bust, sure, it might hurt them, but because they're not crazy leveraged and all these positions probably cash flow pretty well, they're probably not too worried about what is going on. So just make sure your cash flow is sustainable. Try and get more than one cash flowing position, guys. Make sure if you do have a job that it is really sustainable and really reliable. And if not, maybe you should look for a part-time job or a part-time hustle on the sides to protect yourself against a storm that may come, guys, because you got to make sure that your leverage isn't too much into debt and it isn't too much into one or two things like one job or one investment. Make sure you try and find a good diversification around all of these things, guys, which leads us into the last thing is, are you shivering in your feet? Does the cash flowing positions that you have, are they comfortable enough to make you feel stern and strong where all of these other people are going to tell you something else, guys? You have to understand you need to go into this with a plan. Emotions are what kill people in the market. It's the reason 95% of people lose money in the stock market. If you're a swing trader and a day trader, you don't just buy random companies for the sake of it and hope they go up, because if you do, you're not one of the day traders making money. I.e., as an example, I am a long-term passive income investor. So I look for stocks I know are going to be around, hopefully, for my entire life, and I want to collect income off of them for the rest of my life. So I find very stable companies, utilities, guys, banks, real estate, things like that that I know are going to be reliable. Tech sector, Apple. Look at Apple's balance sheet. They have so much money sitting around that if the economy went bankrupt tomorrow and they didn't make a dime for the next 10 years, not only would they still be able to pay all of their employees, but they'd still be able to pay my dividend, guys. So I am not utterly terrified or emotional about Apple dropping. Like I said at the beginning of this video, when the market dips and everyone's telling you to be afraid, that is when you have to have some common grounding, and you have to have some emotional intelligence, and you have to be able to make the decision knowing the intrinsic value of the companies you are buying. And it doesn't matter how bad the markets get, guys. For example, my favorite companies are the drug companies, because it doesn't matter how broke you are, you can always afford a cigarette and some booze. If you ever look at homeless people, somehow they can always, not all of them, I don't want to stereotype here, but I know a lot of broke people, and my mom, another saying my mom always says, it's like, you always know it doesn't matter how broke you are, they can always afford cigarettes, can always afford alcohol. So maybe investing into companies like that would be a good sustainable future, because unfortunately people have addictions, and it doesn't matter how bad the world gets, they still need to fill those addictions. So you need to keep your emotions out of it, guys, but you need to go into buying a company, understanding the balance sheet, understanding what it brings to society, i.e. like water and food is something everyone's always going to need. And when you go into that, guys, with some emotional intelligence and integrity, you're not going to be shivering when some guy next to you in the consensus is telling you should sell. This makes me think of my trading platform, because it shows you the bearish and the bullish opinions of what investors think, and you get the general consensus. And if you always go with the consensus as well, you're probably going to lose money, guys. You kind of have to just be patient, leverage in over time, keep your emotions out of it, go in with a plan and stick to that plan. Because the second you deviate, the second you get emotional about it, is when you lose money. So that's just leaving your emotions on the side, guys. If you are an emotional person, and let me tell you, when it comes to investing, if you're one of those people that can't beat the market, there's a benchmark called the S&P 500. Look it up. If you cannot beat a basic index ETF, like the SPY or Vanguard, VOO is the ticker symbol, or SPY are like the Fortune 500 company ETFs. If you don't know what an ETF is, you better look that up. I always had a rule of thumb, guys, that if my investments made me less than the general market makes, that I would have to have the emotional intelligence to say, look, I don't know what I'm doing. I need to stop doing what I'm doing, and I need to do what I know works. And I know if you just put your money into a basic ETF, that you're going to do well over time, guys. Like the basic markets have always gone up over time, and you would have made money 100% of the time if you just bought in to a basic Vanguard Index 500 fund and never touched it for 20 years. Even if you bought it at the peak of 2008, guys, you didn't touch it for 20 years, you still would have well over doubled your money today. And it hasn't even been it's just been over a decade, guys. So you got to remember, keep your emotions out of it. If your emotions are what causing you to lose money in the markets, you need to step aside and you need to do what is intelligent. And that is how I always looked at it, because I know that understanding the stock market will change my future. And if I'm not doing it correctly and I'm losing money compared to the general market, I need to just give my money to the general market, put my hands up and walk away and simplify the process. This also makes me want to talk about my least favorite investor that was at the beginning of this video roll, and that was Peter Schiff.
Very quickly, Peter, what are you buying? What are you putting money in?
Look, gold, you talk about fear. Gold's not even up today. Gold stocks are on sale. That's where the sales are right now.
If you don't know who Peter Schiff is, guys, he's somebody that put a lot of fear into my eyes when I was a little bit younger. And let me just show you the two different charts, all right? If you were to give Peter Schiff your money and buy into gold in 2008 after the crash happened, who do you think did better? The person holding gold, there's the chart of gold, or the person just holding a basic index fund, guys? I don't like people that try and instill so much fear that tell you to get out of the markets, you have to run, it's going to be the greatest depression ever. Diversify. If you want to own some gold, there's nothing wrong with that. I personally don't like it as an investment, because if the markets crash, you have this shiny piece of metal you can't eat, you can't do anything with anyways. It's just depending on whether someone's going to pay more for it. And heck, you could have bought a Bitcoin. Bitcoin's worth more than gold. If you bought it 2 years ago, you'd have done way better than owning gold. So why listen to these gold bugs that are paranoid as shit and buy into some cash flowing investments, guys? Because cash flow, like I said, if there's intrinsic value in the companies you own, they will cash flow forever. You don't have to worry about the shiny aspect of it and what someone's willing to pay for it tomorrow. You know people are going to be showing up, you know they're going to be having sales, and you know you're going to be collecting dividends. So I'd rather focus on that, guys. So don't get too caught up in these fear-mongering hedge fund managers, people like Peter Schiff. Take it with a grain of salt. Understand emotionally what you are doing, and build up those cash flow, guys. Never over leverage into anything, including debt, guys. So stay cool, stay awesome. Let me know what you thought in the comment section below. I really want to know what you guys think, and I'm so grateful and so thankful that all of you are starting to comment and watch these videos. I'm trying to build a small community of passive income investors that we can all learn off of, because I don't know everything. I'm going to prove that I will be wrong. Everyone is wrong now and again, guys, and I'm going to use this to keep myself accountable, because I am willing to admit it. So let me know in the comment section below if I missed anything, what you guys think about this, but I will see you very soon.
I heard from Peter Schiff on a podcast, and then my father-in-law. So what do you think about waiting a bit to see if that happens, to get a better deal on a house?
I wouldn't, because I don't think it's going to happen. I disagree with the people who are teaching you.
Is this a better time to be fearful rather than greedy?
I'm buying stocks, but I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow or next week or next month or next year. I do know they're good businesses. And in relation, you have to measure investments in relation to each other, and your alternative for most people is fixed income. And you get 3.02% or something like that for 30 years. So would you rather invest in a company that's earning 15 or 20% on their invested capital and compounding, or would you rather have a 3% bond which can never earn more than 3% while you own it?